Right. Well, good morning, everybody. Welcome to the Pro Trader webinar series. This is specifically on how to use Bookmap's liquidity heat map. Uh, I've been using Bookmap since about 2015, and the main reason that I searched out Bookmap was because of the heat map. I've been trading going on 46 years, and finding a tool that would allow me to, quote, read the DOM, the limit order book, which was something I could never do. I could never keep track of the changes, and especially where was previous liquidity located. Some traders develop a specific skill, and for many traders early on, before order flow and limit order book, it took a special kind of mind to be able to remember where the liquidity was that previously transacted. It's just not a practical thing. And there was a time, as I mentioned, where traders could create an edge with that when other traders didn't have ways either to process those inputs in real time, and most of us did not have access to that information. Well, along came Bookmap. And after doing substantial research into what tools might be available as they were evolving, personally, I found Bookmap to be the answer for me. And it was maybe one of the best decisions I ever made. And what attracted me to it initially was the heat map. So we're going to talk about the heat map. We're going to go into it today. And while it may seem logical as far as, how the heat map is working, understanding the heat map is a different issue. Most of us, as we develop as retail traders, are very much into red light, green light. It's natural evolution. But in order flow, not everything is as it appears. And the reason for that is it is constantly changing. And the limit order book, which is the passive side, and we'll talk about aggressors and passive side, is always moving. And whether it's algos now adding in, whatever's going on in there, or orders that actually intend to execute, the heat map can give us insight. And that's the focus of this series. And I encourage all of you who are interested in upping their game in how to use order flow, how to use the tools in Bookmap, but to gain a better understanding how you can integrate these tools to potentially create better outcomes. It's about edge. And the more layers of edge without adding noise is key, in my opinion, to be able to act in a consistent process, which can, if vetted, can give you a better yield. By the way, 4th of July sale. I have to mention this to you. If you missed this or you haven't been, you've been too busy doing other things, you can save up to 50% off Bookmap Global Plus and Data. And this goes to July 11th. Now, between you and me, if Bookmap had this in 2015, I would have moved faster. But the thing is, as soon as I made a decision, I did it. And again, it's the best thing I ever did. I just didn't understand how much of a positive impact it would have for me. But like everything in trading, you have to find what speaks to you. And there is a lot of education here in Bookmap. And also, and there's no cost for it. So if you're interested in order flow or just what other educators are doing, this is the place to come. So let's take care of business. A little bit about me. I've been trading professionally and individually since 1980. I focus mostly on the ES because I'm an educator, and I do focus on order flow, and I use the volume profile and auction market theory. It's about structure. And when you layer pieces together, I always called Bookmap the tip of the spear. So it's really about having a plan, a process, and an understanding of market mechanics, which is what I focus on in the TraderLab. And then once you have the elements in place, how do you actually trigger or get into the market? And this is where you kind of get I call it the scalpel or the tip of the spear, and that's what we're going to look at today. So I hope you find this interesting. And by the way, if you're interested in the TraderLab, it's open to everyone. It's a community of like-minded traders who've come together to leverage their collective experience. It doesn't matter how long you've been trading. What this is about is building a plan, understanding the business you want to be in, and tools you can use to potentially create a statistical edge. General disclosure, all Bookmap Ltd. Materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. By the way, if you have questions, post them in the chat. I will do my best. Also, thank you, Bookmap, for supporting the TraderLab and making this kind of education available. Now, I have some PDFs here. I hope they will be clear. Apologies if they're not. Let's get this. Oh, there you go. So this is your heat map. Let's see if I can get this a little larger for you guys. Hold on. Again, apologies for this. When it comes to high tech, not my thing. So and I draw a little box around this. I want you to see behavior. Let's just take a look up here. So this is at prior to RTH open, so 8:25 Central Time, and these are just some examples of ideas. Now, without going too much into the basics of the heat map, but what is the heat map? Let's talk about for a second what the heat map represents. It represents passive sellers. In other words, they're not selling at the market. What they are doing is saying, fine, if you give me my price, I'll sell it to you. Otherwise, not interested. They are passive participants and they use limit orders. Also, icebergs, which are an important integral part of this behavior, often execute, and they're not always visible in the market, but they do have to show part of their order. And of course, they get a benefit of that is they can't or won't show all of it because they don't want someone to know that maybe they've got a couple thousand to execute. So that's where all this starts fitting together. And Bookmap gives us tools to see these elements. And there's a bit more. And then I'm going to talk to you about what we're looking at here. Try to. Here, let's just go a little further. So this is where that, let me just get my cursor, it's 8:30. So this is where that liquidity was I was just showing you. And now we open and let's look at what it says. We know there's a seller here. The other part of this is resting liquidity. Resting liquidity is more meaningful, at least to me, than something that comes in. I think we'll say don't show again. That might be a good plan. Something that might come in and jump out. I'm having a little trouble with that. For example, here. By the way, this is the liquidity marker. And what's really neat about it is when the heat map, the darker it is, the more orders are sitting there. And the liquidity marker can show us they added 400 here and then they pulled 400 there. So what was this guy doing? Well, if this comes in here and this is a seller and they cancel, then they're opening the door for the market to move higher. So when we see this behavior, it's like removing roadblocks. But notice how different this is. It's not going anywhere. Now it interacts here. And we find, and what's happening right here, and I'm not showing you delta, I'm just showing you the heat map, is we interact, and why doesn't it go higher? Well, are we having a problem here with the screen or anything? Okay. So what we had here was resting liquidity. And what happened over here, it was front running. We came back up and executed. The way I think about delta or aggressors, and we'll talk about that when we get into today's trade, is it's like Pac-Man. If there's more sellers up here, the buyers who are aggressive here, and by the way, buyers, or the way it's represented in delta, so you know, is the aggressor. Stops become market orders, so they show up in delta as aggressors. So if I have buyers and I see stops going off and I get the passive side absorbing, the Pac-Man concept, more sellers absorbing. So what's happening up here in the order flow is absorption. I get my sellers. I come back and test. Why would it come up here? Well, because I have the historical heat map, I know there were sellers here. If I come back to it, are these sellers still going to be here? Well, yes, they are. So then down we go. It's one way to use it. Now, let's look at this over here. I'm going to try to move this over here. We have this liquidity comes in. There's a liquidity marker, and you notice it gets dark. So what the heat map is doing, it's showing us, let me see if I can, having a little trouble here with this. Let's see if, there you go. Again, sorry about this, guys. So there's that 95. Now, so we had our sellers here. This comes in. Now, why would this come in the book? What's this all about? Does this guy intend to trade? Or, and here's the or is this coming in here to skew the book, put downward pressure? Now, it's a question because we won't know the answer until we see the behavior. So is it possible, and we never know for sure, that these sellers up here want to kind of put pressure on the market? And it's also the perception, okay? So if there's pressure there, then what did we have come in over here? We had the liquidity come here, and it interacts right here. So this guy shows, he pulls, he comes back in. Now, we don't know it's going to come in until it does. The liquidity shows up, we trade into it. Now there's another, and these are buyers, limit order book. There's buyers with liquidity here. They pull, they come back in here. So buyers, and what's up here? Sellers. And why is it important to have a historical representation? This is what the heat map does. It shows us where there was activity. Well, this comes in. Is that a coincidence? And you're going to say, I don't know. And I'm going to go, is it really? Well, the way I interpret it, and it's everybody kind of finds out their own way to interpret these things, is what happens. It's not that it's there. It's what happens. If I have buyers here and the market runs through them, and then I come to the next, this is like support and this is support. But if I have more sellers who consume these buyers, then what does that happen? You know the concept, support and resistance. Well, this becomes support. And if I have more buyers here, it can create a reaction. Now, what about here? If these guys bought this, and they might be covering, we don't know. Well, then, if this is too low, what was too high? Wasn't it this? Too low, too high. This can be used, if you vetted, as an area to lean on for a short. And then where was support? It was here. So if you sold this, if it fits your plan, you could be covering over here. Now what do we know? Support. We break below. And what is that old concept? Support becomes resistance. Support, resistance. Support, break low. What happens? This becomes resistance. Watch. Support, buyers, resistance. This comes into the book. Right there, support. What else comes in? Support. You can see it coming in here. So if I know that I had buyers here and I see the reaction, now I know, what's this? Resistance. Support. Where does it come? Back here. Resistance. This is support. What happens here? They pull. You can see them pulling the orders here, and I can't say whether some transacted or not. We're not looking at that right now. They pull. So the buyers were here, and maybe there was somebody covering here, and the sellers are up here. These guys are done with their buying. They pull. We break, and now we come down again. Now what happens? Resistance. And you'll notice they started adding all the way back here. Resistance. Break high. So where is my resistance? These guys come in. Resistance is where? Wasn't it there? What's the high? Break. Support. Break. Support. Resistance. Now I have this one. So I'm leaning here and we break, and it goes on and on. You know, I can keep going with this, but I think you're getting the idea. So, and let's go a little further into this. Now, I'm going to show, this is the heat map. Now, what is this heat map? Let's get into this. It's the limit order book. And the way Bookmap operates is when you're in real time, there's a little white line. And by the way, you can execute on chart, but let's just talk about what's happening. The real-time heat map, which I'll show you later, is going to be moving around. And then everything to the left of this white line that you'll see, it looks something like this, is historical. So we're not losing, which is what was a problem for me trying to trade, look at the passive orders. We don't lose where these orders were. Now, obviously, if you look at this, what's this all about? Well, it's nothing. Look, they add, they pull. They add, they pull. They add, they pull. So this is nothing but noise, okay? So now, let's look. Now, the thing about it is, in the TraderLab, I focus on volume profile and auction market theory. But the important thing about using the heat map is it is the final piece for execution, your trade entries, and also we can use the heat map for trade management. And we can also use the heat map for continuation trades if we actually can kind of put these pieces together so there's alignment. But I want to focus more on the heat map today than anything else, because those of you who are interested in the business side of trading, you can always visit the TraderLab, and you can access it, and it's also available in YouTube on a daily basis. So let's look at the RTH Open. Now, there's a couple elements here that give us trade locations. I'm not going to spend a lot of time because this is what I do in the TraderLab. But let's look at a couple of pieces here. Now, I'm including some other elements in here. These are icebergs, so that's a buying iceberg. These are sell stops. Here's your heat map. So when we start looking at this, and the bubbles are delta. So what we want to see is if the buyers come up into this, what happens? Are they buy stops? And it's going to be across some initiators and buy stops. So, and are the icebergs taking the other side of the stops? So that's a piece of this. So let's focus on the heat map. And by the way, if you have questions, you can post them there in the special events chat. And thanks again for visiting here today. RTH Open. So let's look. We have resting liquidity here. We have a key level, which is volume profile auction market theory based. It's really the fair price from the ETH, which is our last auction. So Let's take a look. So RTH open. Now we're looking at, oh, I wanted to mention something else. This is where the high liquidity is. The darker this gets, the less liquidity is in the limit order book. And you can see, where it's heaviest, it's darkest. Now, the other part of this is, as there's less liquidity, it goes black or very light. So it's letting us see. Now, when these guys start pulling, you can see 126 came out. It starts lightening up. The other thing to know about this is, as you scroll up and down, the heat map's going to adjust to wherever the most liquidity is. So if I was to zoom out and not have this on here, this would show up as the darkest. So it's based on what's on the screen. Now let's talk about passive orders very quickly. What it is a passive order. Think of it like when it's dark here and there's very little liquidity, it's like asphalt. There's no or very little resistance to movement. That's why in thin markets like NQ, where there's very little limit orders in the book, it can rip through them. Here in the ES, there's a lot more depth. So that's why it's a good market, I think, for developing traders. But dark, asphalt, to move quicker. And then this is like rocks in the road, pebbles. So the more pebbles you have, it can, and assuming they transact, it's going to act as resistance. Now, the thing about resistance is we can take it out, or the buyers are going to run into this, and this will consume those buyers. And that's how the interaction is between the delta and the liquidity. So all this is moving around and all this is going on. And the thing about the heat map is it's the reaction and the movement. And like everything, we don't know the intent. So it's not a red light, green light. It's really more about, it's a suspect. So let's take a look at let's just follow this and see what it does. And remember, there's nothing mechanical. This is resting in the order book. You'll notice we come down and you see the icebergs here. What's going on here is these icebergs, you notice the sell stops, they're taking the other side, okay? And these are buyers. Buyers. Now we break below. Let's just see the behavior. We break below. Remember what I showed at the top of the stream. Notice the sellers and the big icebergs buying. So this seller, sell stops. So this is your buyers are here, limit order book, icebergs, and there's your delta. Remember, delta's aggressors, which are made up of stops and market orders. And of course, stops become market orders. So now I can look at this and I can look at it and go, well, there were buyers here. If I can't get back above these buyers, then it's possible that I may get selling here if I come back. Possible. And that's not saying it will. It's always in trading, maybe. And I also know if I get above here, this might act as support and I can come across the range. So let's just see what it does. Okay. Now this is a pretty wild morning, as you guys know. It's been a two-sided trade. So in the TraderLab, we talk about something called mean reversion. Let's come back up here. Notice this liquidity comes back in the book here. They add, they pull, they add it back in, and we come up. Now, this is a key level in the TraderLab. And it really, what it does is it represents a fair price from the ETH. The market has a tendency to check pricing. And if it finds too low, which is here, and you'll notice the liquidity starts coming in the book under here, and we can squeeze. So if we do squeeze, then everybody in this leg from the RTH open, so this is the opening swing high, buy stops are going to be there. So once this is too low, we can come across. Now, let's look at a few other things. Sellers were here. And when I see this, I'm thinking about pressure. This comes in here, pressure, pressure. Now, once I start coming above it, then I have to see what do these guys do. Pulling, pulling. What happens over here? Sellers are here. They added here, and you see the selling icebergs. Now here, the buyers get above them. Now let's take a look at what happens here. Remember the concept. We're kind of thinking about support and resistance in a way, but it's not mechanical. So the idea of this is, why would we go through this? That means there's more buyers here, right? So we consumed whatever liquidity is here, and you could see the selling icebergs. They're selling, 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 and there's your buy stops. And what else are we doing? We just took out the opening swing high. What's the opening swing high? Stops. If you wanted to sell, would you step in front of the opening swing high, or might you let it get taken out and see if there's buying above it? But when you see the iceberg, and then you can break underneath these sellers, then you might have an opportunity for a short on the way back. Does that make sense? And look how the book thickens up. So what do we know? We know from the ETH that we had sellers here. There was absorption. We have this come back in. There's still ETH. This liquidity is in the book, so we get early selling. We come back, and we are coming back to where the sellers were in the ETH. We come into the liquidity. We squeeze the opening swing high. Thanks for playing. And we get our sellers. When we break under here, this sets up a opportunity to get short in the TraderLab. Right here, let me show you this. Whoops. Just try to get it in here. Close, but no cigar, right? So what I know here is I have my liquidity here. I broke above it, and right here, no clue. And I say that because until it changes, it hasn't. I get my sellers. Now I know that my sellers are here. I have a retracement, and I come up to my area of interest. This starts thickening up. As soon as I see this, this is pressure. And while I don't know if what this is going to do, because I can't know, I see and notice how the liquidity marker is showing me that's a lot of adding. Why would somebody come in here? I mean, do they really want to sell it here, or do they want to put pressure on the book? Well, let's just see the behavior. And remember, these aren't trades. These are just ideas, right? So when you're watching the heat map, and it's a piece. Now, the thing about the heat map is it is not a mechanical process. It is specifically, for me, it's an alignment tool. So when I'm in my locations, this is a trade for me in the TraderLab. It's one of the structured trades that I share. And of course, you have to vet these. Nothing is mechanical in trading. Wouldn't it be nice if it was? Not so much. But I know is location, location, opening swing high, squeeze, anticipated. Also, you would learn in TraderLab, the nature of the market today is a two-sided market. So you would be trading primarily outside in, not inside out. It's a different concept, but it's how you know until it changes, if you have a trade plan, that you're going to be looking to be selling outside edges. And a part of the joy of trading is what's outside. You know, how far outside, where's outside? And that's, again, nobody knows. So your job is, since you can't know, then what you need to know is where you will trade, or at least the area, and then find alignment. And this is where Bookmap comes in for me, because now I'm looking at order flow. I'm looking at the passive orders, and I'm looking at where these orders come in, and why is this here? Why did this come in here? I believe, from what I've observed, is to put pressure on this book. Now, the other part of it is, part of the thrill, is that we have buyers in here. So what does the market do? Market goes down, so you have buy stops to go up. Market goes up to go down. And why might it do that? And of course, it can do anything. The condition of the market, based on TraderLab, if you will, and auction market theory and the rest of it, which you can learn about in TraderLab, and build out the business of trading, is the context today is two-sided trading. So that is outside-in trading. It's called mean reversion. So the liquidity, the heat map is showing us potential intent. Now, what I know is, if I'm in two-sided trade, the longs have sell stops below, and in this leg, the shorts have buy stops above. So it's rotational trade. So this is helping me. And remember where my location is. Now, locations in trading are it's like real estate. Location, location, location. I know I have a high probability, and statistics are available to all of you in TraderLab, of getting here. Now, how you get there is part of the thrill of trading. It's random. But when I come into an area, and based on the auction principles, we know this was the highest volume or retail price in the ETH. Now I'm going to look in here, and I have other levels in a higher time frame. I can't go into it here, but I have alignment right here. That's where all this comes in to give me more confidence to be able to execute. So this is my short. And then it's, here's mid, and you would scale potentially at the mid based on your edge or trade plan. And then I pull back. Now, if I pull back, notice what comes back in the book. Now, I don't know it'll come back in the book. I'm, no idea. This is still in here at this point. This is now dropping down, so more liquidity is being added here, which is adding pressure. And it doesn't mean, let me be very clear, this comes up here and they pull, then again, the asphalt, if it's smooth, then if we get stops going off, then it might be smoother, and then the buyers will go further because they are clearing out the limit order book or the passive sellers. And if they want to buy at the market, you need somebody to sell it, right? So, but they didn't. So there's your pressure. So let's go a little further. Let's go see what happens down below. Now, remember, buyers were here. Now, the thing with this is, remember, it is not mechanical. Well, let's take a look at some ideas here again. Now, in the auction, this is an important level. And this is an important level in the auction. So if you're playing the short side on this, you would be going, this is a target down below. Now, let's go over and take a look at this thing. Let's watch how the market behaves. So this is your short. This, if you have a structured trade for it, is a continuation. It's in the TraderLab. This would be your scale. If you break below mid and VWAP, this sets up, this is a target, next target, these are structured, and then we have target below. So let's see. Now, let's look here. These guys come in, and where are they located? Right under here. What happened here? Absorption. When you see delta, and I know I'm covering a lot of pieces, but they fit together like a glove. When you have sellers like here, and the market doesn't go down, that's showing us that the passive side, the limit order book, that these icebergs are buying. Now, they don't have to show anything, they could come in here at the last second. So, But when you get this, what is this trying to do when this comes in? Is it possible? Is it possible that the buyers that were here that created this move are waiting for it down here because there might be stops for the longs in this leg under here? So when there's stops right there, that gives them liquidity and they can absorb it if they're interested. And there's your reaction to it. Now, we don't know when it comes to the heat map or any liquidity in the book, is it the shorts from up above that are just covering into the stops? Is that why the buying icebergs are here? Or do you think they want to get long? I don't have an answer for that, never have. So I just kind of follow the yellow brick road. Speaking of the yellow brick road, what was this? Break high. We break up. Now we break below it. And what do? We come back and check it. Now, what I know is there were buyers here. You can see the absorption. Red delta, sellers, sell stops. That's what we're looking at. And then the reaction. Now what? I come back here again and I get buyers. Except this time I break low. So what does this present me with? Possibility again of this is support, then we might think of it as potential resistance. What happens up here? There's my buy delta going to the moon. But what happens here? I come back to my location. I have my buyers. Why am I not going up? They are being absorbed. These buyers maybe are turning into sellers. And I don't know, again, maybe they were covering the down move. Maybe they thought this was a great place to get long. We don't know. When I break below, I'm going to watch the reaction coming back here. And subject to my plan, if I have a structured trade here, I might, if it's vetted, have a short continuation trade. Notice the liquidity comes back in here. Now let's see what they do. You'll notice that the thing with the heat map, and the heat map is showing us the passive orders, what we don't know ever is what's going to happen as the market approaches it. Are they going to trade or are they going to pull? So these guys are canceling. So as the market's moving up, you can see how it gets dark. So this is in the book, but it's not doing anything in the sense of interacting. It's just in the order book. But now we come up here. Now, what's interesting here, right here is now I'm seeing my icebergs, and in the TraderLab, this is a potential trade location. Now, when I say potential, I truly mean it because it's all about observing behavior. This stays in the book. This is a structured trade in the TraderLab. I have my selling icebergs in here, and I look at the delta. We can see the buyers, but why aren't we going anywhere? So this is sitting in the book. This is a sell trigger, and this is a structured trade. Now remember, you don't have to have liquidity visible. Notice what happens. We come down here, buying icebergs, and you get a reaction. So now it's how far back do we come? And we still have a, this was our target, by the way, coming down, remember? And here we have a sweep, and the icebergs are here. There's absorption. So the idea behind this is to try to align pieces that fit your plan. And this is a really difficult day. It's called balance, and it's really mean reversion. Notice what happens over here. Absorption. Right above here, you get a reversal. So the thing about the heat map that I want the confluence And for me, it's really confluence. Let's look back up here. So let's see what it does up here. You see something familiar. Liquidity comes in. I'm back at a location. I get comes in the book and it appears stable. As the market comes up, I get this adding coming in. This is pressure. It's suggesting the potential for more sellers. Now in the auction, we have other elements happening here that assist us, and it's called alignment. I'm back at the retail price from the ETH. Remember, we were taking shorts up here before. I'm back at a key location, and this is called VPOC migration. It's a part of a structured trade in the TraderLab. So right here, this is a retail price. The order flow in the heat map is showing me pressure. I have a potential short that takes place if this breaks below here. There's my sellers. So when I see this, it's alerting me. Now I can come up, I can go through, I can do anything. Once I break below here, this is a potential short. TraderLab structured trade, but it's the confluence, okay? Now what? If I break here, here's some liquidity. Notice the bounce. Buyers, there's the icebergs. So I'm seeing the icebergs. I'm seeing the pressure. Now here, you'll notice that the pressure is off. You'll notice here, at a location, the liquidity comes in and I get a reaction. This is my resistance because it was too high. I break below this support, check it, and what happens on the retest? Let me draw a little box for you here. So what I'm doing when I'm looking at this, I'm looking at behavior and what happened. Let's look at just some confluence now. In the TraderLab, this is part of a structured trading process. This comes in, gives confluence, more confidence to take the trade. Now, the thing about trading, of course, is confidence is nice, but it's always random. But the more edge you have, and for me, edge is not more indicators. It is more useful information and minimum inputs. So I have a consistent process, even though the outcome of any interaction is random. So it's minimum elements that create edge, not more elements that are random. And then you're more of a gambler than somebody with a structured process. You cannot create an edge with random inputs. Casinos operate with fixed inputs. So for me, even though the limit order book is random in the sense of the adds and pulls, because we don't know their intent, I do understand if I see behavior, it tells me something about the condition of the market and the intent of the players. Now, this can change, of course, because they may do their business, be done, and that's the end of it. We don't know, part of the joy. So right here, I had my buyers. This is resistance. That's resistance. And right now, that's resistance. Support, break below. What does it become? What does it become? Right here, it is potential. I have to be conscious what happens here. Break. This is a potential short. And where's my stops? Let's remember, my stops are under this swing. Now, for me, and this is not a recommendation, you always have to vet things. Where were the buyers here? Well, the buyers came in here, and the sellers were here. When I break above the sellers, and this is the absorption, this trade can be over or not. It's all subject to your trade management. Come up here. This is your short, just showing you. So this can be a short. You need to get under here because this is where the buyers were, and then you're looking to come down to where the buyers took over, which would be either here or here. The reason the market is going down here is you got sellers right here. There's your icebergs. The sellers are here. They are absorbed right there. That's delta. Now, you don't know until you get a reversal. Buyers are above the sellers. Sellers were there. Sellers were there. If I get above these sellers and the buyers now are taking control, you might want to get out of Dodge subject to your plan. And that sets this up. That sets the short up here. And then you're trying to come back to where the buyers took over. It's all a matter of your plan. So this trade could be done here. And this is really price action and understanding the participant behavior in the icebergs. So let's come back to our heat map and see what happens here. What happened here? So what do I know? Let's talk about what we know. And there's a lot we don't know. We know this might be too high. So this is an area to observe, and this is too high. So in the TraderLab, if you're rotationally trading, you typically are trying to do is get outside. So you want to try to get outside and come back in. Get outside and come back in. It's called mean reversion. This jumps into the order book. Notice how it skews the behavior. It's the sellers. It's these icebergs. This liquidity was here. This liquidity now is up here. I'm going to mark it. Whoop. There. Liquidity is added down here. There's your behavior. Now we're in real time. Hope you get something out of this. You know, the thing about this is if I understand what might happen, I might be able to, let me show it to you. Notice where I marked the liquidity. Now, I haven't seen any of this because we're in real time and I don't know what's going on. I'm looking over here. So this is what's important. This sets up a short for me here. This sets up a continuation trade for me there. And this is called mean reversion. We kind of joke in TraderLab, yeah, it's mean. Because you're trying to find outside edges. Well, where's the outside edge? Well, I know that the market reacted here. We didn't trade into it. I get front running. These icebergs are selling. They're absorbing these buyers. And who are the buyers? Buy stops. Where's my resistance? In the TraderLab, this is an area for a structured trade right here. Now, the other part of this is if I got short here, just give you an idea, and I have to get risk neutral, and then I have statistically based targets. Another issue, another time. Come to TraderLab if you're interested in this. This didn't trade, but it's still in the book. So this was potentially, and I'm just going to use the term potentially because we don't know until hindsight with anything in trading, front running. So if this stays in here and I come into it, now I want to see what happens. And let's look at what happens. Let's open this up. And the more I open it up, the more detail I get. And so I can really drill into this. This is the other thing about Bookmap that's pretty cool, is that I can see this is not going anywhere. It's not flashing, it's hanging out. This is my area. So I get my buyers. Why isn't the market going up here, you ask? Because the sellers are here. And these buyers, and here's a little trick. I'm going to share a little trick with you. And Bruce, I hope you're okay with this. This is the stop and iceberg detector. Now, here's what alignment. I have resting liquidity. I know I had front running over here, so aggressive sellers potentially, and I have buy stops coming up. If I have 53 buy stops, now you can break this up and see it. I aggregate them just because I don't want too much on the screen. But I mean, if I zoom, you can see how it puts them together. Let's look at what happens here. 78 buy stops. Thanks for playing. I always like to say this is when you get, if you're a gambler, they give you a coupon to the buffet. Now, 2 buy stops are up here. So I have buyers, but who are these buyers? If it's buy stops, are they strong buyers or weak buyers? They're the buyers who are getting squeezed out. And who's on the other side? The icebergs. This is not pulling. I got my buyers. I only got 2 here, 78 and 52. You guys remember the term divergence. I called this stop divergence. If I don't have initiators at a higher price, you could see here, higher, so 52, 74, 4. Where's my buyers? There's my liquidity. This is my absorption. Nada, zippo. Sellers are below the buyers, liquidity, stop divergence. Short. Just saying. And this is just an idea, okay? You have to vet everything for yourself. Now, this right here, this is the retail price. This is mean reversion. And this is the mean. So if you took this, you're going here, and then whatever, whatever. And I don't know if this is, in fact, today in the TraderLab, we were talking about something called an inside day. And that means that we can take out both the first hour high and low. It's called a neutral day. Notice the resting liquidity here. Now remember, this was our resistance, right? Now we're eating into this liquidity and we have a sweep. We have more liquidity resting up here, and we have over a 90% probability of taking out either the ETH high or low. Go pick one. All right. We're back at the retail price from the ETH. So now we want to see. Now we cleared this liquidity out. This was our resistance. Next layer is up here. And you can see if we look at the limit order book, let me open this up. We have most of our orders are sitting right here. And this is pretty much that little white line shows us that most of this, or maybe half of it, is one player. So probably an iceberg sitting up here. Let's see what happens. Now, these are not automatic buy sells. For me, I need alignment. So we want to see, now this is the current high of the, well, let me make sure here, because I haven't been looking at this. Current high of the day. If I take this out, and I come up, I have resistance out in this area, potentially. If I come out here and I get selling, and if I can break below this, it might set up another reversion short back to here, but we have to look at the behavior. So let's just zero in on this and see what the behavior is. The idea of this is to get above here. Let's see what it does. Are you guys with me? How are we doing? How should we, I'm getting a question. How should we view things when fresh liquidity comes in near current prices? Well, it's for me, it's the reaction. Because there's spoofing and all kinds of things go on. In other words, somebody can come in here, pull this and push this. Now you notice they're starting to pull over here. You see how it got lighter? So we have some selling here, 232 buy stops, and we're now touching this. So we're looking at what's called a neutral day, which means we take out the first hour's high or low and potentially an inside day. Okay? Doesn't mean it will, it's just maybe. So now we want to see what happens here. Does liquidity come in here, or do we just keep motoring up? high probability target here. I'm going to give you a statistic, and of course you have to vet this for yourself, but this is some of the information I share in TraderLab. There is roughly over a 90% probability we take out either the ETH high or low. And it's the same for the first hour, high or low. So if you're in TraderLab, you would have these statistics. So now we're getting buying above here. So we're going to want to mark this out. And see what happens. Now, the plan for today, and this is not a recommendation, is outside in trading. Now, the market can do anything, right? And we all take stops, so, we have to get over it. Nobody likes paying bills, but every business has overhead and cost of production, right? So you'll notice now the reason this is blue is because there was so much liquidity here. If I scroll, so that is, I don't know if I can get this off. I just want to show you. Well, I can't really show you because this, from a graphic point of view, is dominating the heat map. But I need to be conscious of this. And you could see it's a large player again. Flashing. Now, the thing with this is we don't know if they really want to trade or if they're going to pull. They can do that. So let's watch. There's a seller. There's our icebergs. Let's watch the behavior here. Now, remember, it's not automatic. This is a target coming up. The TraderLab, part of a TraderLab structured trade, if you were holding longs. Or you're just taking outside in trades. Mean reversion. So the idea now is to be looking for potential shorts. And then you're going to be looking to come back here. So nobody can suggest to you that something will happen somewhere. The best you have in this is maybe. Maybe we'll come back here. And if we get under this, then maybe we'll come back here. So we'll have to see, okay? And these are not trade recommendations. It's only maybe. Maybe this is too high. It's either just profit taking and then we regroup and push higher, or we now have a neutral day and that is mean reversion. So for me, not a recommendation, this would be a short, and I'm looking here. And this is aggressive. I'm not saying anybody should do this. And certainly I'm not calling a trade. I take stops, so I take my stop, It's just cost of production and overhead. It's not about being right. It's about understanding how the market works and using a high tier order flow tool to try to give you edge. And the rest of it is what it is. So what do we know here? These guys were absorbed. This so far is staying in the book. I'm getting liquidity added up here that can skew the book, and I'm looking for it to come back here. And then if it gets under here, back. So for me, the risk reward on this trade, which would be back to here, not a recommendation, is okay in spite of it all. So take stops like everybody else. So overhead and cost of production. I know emotionally we feel wounded, because we have attachment. But in the casinos, they're doing the same thing we do. They're gaming, and trading is a gaming business. It's statistical probability. It's not predictability. So if it works for the casinos, then we can overlay using tools that can give us a potential statistical edge. And in TraderLab, it's about that. It's all about the business and crafting a process where you can extract the statistical edge. And of course, using order flow in the heat map is an integral part of that. Because traders who are just using candles, they don't have any of this information. And you certainly can't look over here and know what happened before, can you? This is still in the book. This added pressure. Now, we have to watch what happens over here. Notice how they So this is your target. So this would be your scale if you're inclined. Nothing wrong with this. And let's look where we came. Okay. Now I need to clear this. So this would be a trade. If you took it in TraderLab, you'd be risk neutral. And now either we're going to come back and take these guys out. And if they pull, this is something you have to vet. What do you do with your trade if these guys pull on the way back up? Or does somebody add? Now this, you'll see how these flash. That's algorithmic, like this kind of stuff, in, out, in, out. Now, it can be a number of things. You'll see how we uptick, it pulls. So it's just noise to me. What is important for me is this, because it's staying in the book. This is algorithmic. For me, it's noise. So what I'm doing is I'm using the heat map to try to identify more significant potential behavior. I'm watching the transitions of the liquidity. Is it working against me? I mean, does something huge come in down here? And as I approach it, does it stay or does it start flashing? You see, notice now we have some more liquidity here. This is still in the book. See how it pulled? So this is kind of where, you just have to accept that there's a lot of games played. But if you understand the difference between algorithmic behavior, and we don't know their intent, and something like this and this, which came from there, can you do something with that? Can you put that together and make it part of your plan? It's an integral part of my plan. And what it does is I have shared 60 PDFs of structured trades in the TraderLab, and a number of them highlight this. Where are we trying to go, by the way? And remember, I'm not saying anybody should do this. I'm saying isn't it interesting? Do you think other traders that don't understand order flow or have a tool like this can actually operate effectively or as well as somebody? Does this give you edge? I wouldn't trade without Bookmap, and I've been trading with Bookmap about 10 years. And I will tell you, Bookmap is a high-tier tool. It's not your spaghetti crossing over. When you start getting into more professional tools, it is nuanced. You have to understand it. You've got to learn it. It is, simplicity. When you get into something that really is sophisticated, you have to educate yourself. And I'll tell you, there's tremendous education in, that Bookmap offers in their server, Simple Trader, hi. Let me see, the TraderLab is open to everybody. It's been in the Bookmap server for, 3 or 4 years now. I kind of lost count, and there's no cost for it. It is a trader education portal, and it's a group of traders that have come together. It doesn't matter how long anybody's been trading. It doesn't even matter what you do, because we want to bring it, because it's the leverage of the community that creates, and the professionalism. It is really about business. And how do we operate in an environment that's foreign to us? How do we use tools that are not what most of us grew up on? We all start out with indicators, moving averages, and spaghetti, and maybe get the candle, and all this. Well, that's what most retail traders are doing. And while nobody can, guarantee, results, and past performance is never indicative of future results, if you're in a competitive environment, don't you want the best tools you can get? And for me, I wouldn't trade without her. And where was our target, by the way, right? This. I'm not saying this is anything more than what? Trade plan, understanding market mechanics, and using order flow and the heat map for structure. Can you see the logic? A short, a scale, resistance, who knows? Target, what is the condition of the market? Mean reversion. This is the mean. If you were trading only a 2 lot, your trade could be done here, or you scale here because the context is what's called mean reversion, and then you hold for here. Not a recommendation. These are trades you can vet and build out in the TraderLab. And there's a lot of great education in the Bookmap server. I mean, it's ongoing. It's every day. And I think trading, at least for me, and I'm doing this 46 years, is finding your groove. Like what speaks to you. I mean, there's not one way to trade. There's not like a right way or wrong way, but I can tell you what I think. If somebody asked me what's the right way to trade, I might give you a simple answer. It's doing the work that gives you a statistical edge or probability of one thing happening over the other. It's the same as gaming or how casinos operate. Remember, casinos don't control the cards coming out of the deck or how the gamblers play the cards. It's all random. What they control is how they play their game. So blackjack is an example. It's always 7 cards. They always cut the deck a certain, they do their thing. They don't change it. They don't skip the next hand if they pay the gamblers. They expect to pay the gamblers. That's why the gamblers come back to the table. It's overhead and cost of production. But they don't change their game. They play games with an edge. So if we want to think of this, not that we're playing a game, but that we're sitting on the side of the table operating like a casino that only plays games with an edge, then it's how do we create edge? Order flow is a key piece of putting these pieces together to create edge. Now, and in the TraderLab, what I share is how to put these pieces together and vet. Vet means, where is your trade? If I know where my trade might show up, which was there, and this, of course, is all before the fact, and I know what happened in this area and what is happening here, does that give me an edge when I combine these pieces? Now, of course, what's going to happen after that? We're sitting with the dealer on that side of the table. We don't know the outcome. We do know, if we've done the work, where we have an edge. And if you have an edge and you combine these elements and you know where your trade might show up, and you know the elements that might give you a triggering structure, and you know market mechanics, where the market might go, does that give you the ability to potentially generate a sustainable business? And what are the tools that are give you the best potential for sustainability? I'm going to assure you, at least in a personal opinion, it's not what everybody else is doing. Most developing retail traders never get to a point where they get to this kind of tool. They're too busy jumping, around to the easy one thing you need. And if it was that easy, we all would have done it. It's not easy. What's hard for us is randomness. So can we remove the randomness from our behavior and create consistency so we can measure it, even though the outcome of any interaction, just like the casinos, is random? If we have anchored inputs, and I did a primer webinar, it's got about 34,000 views. It's about an hour, and it was the first one I did. Bruce at Bookmap asked me if I'd be interested in doing a webinar. I said, yeah, okay, why not? And it's not really my thing at the time, but I started thinking about it. And, before I figured out how to trade, I have to tell you, I went down so many dead ends that it was ridiculous. Now, when I started, there was no PCs, no internet, nothing. You bought a book, there was no education. And when I started as an off-floor trader, there were no off-floor traders. That made it even more exciting. So I was like a pioneer in many ways, using indicators, which I thought was the way to do it, in classical bar charting, which is I learned at the CME. Those of you who know my background. So I spent years trying to become consistent. And the problem was I always had winning trades. Now, you may think that's a good thing. No, it's not a good thing if it has no edge, because then it's just random. Remember, gamblers win, but over time, the house extracts the dollars from the gamblers. I never understood that I was gambling. I thought I was just trying to make it better. But all I was doing was adding more random inputs, and all it is random outcomes. If you're in a random environment with random inputs, the old saying in the computer world early on was garbage in, garbage out. So instead, over time, the light bulb went off, and it was like, I've got to anchor my inputs, otherwise I can't measure it. So when I have order flow and I have the heat map, I now, and locations that are vetted, I can put these components together and develop more confidence to execute. And why would this maybe be a target? Because of what happened here. Resistance becomes support. Resistance, support, reaction. They stay in the book. Hasta la vista. Thanks for playing. Target. Trade can be done. This is a sweep, by the way. There's so many tools available in Bookmap, more than you may ever use, but you can customize it to your groove. You know, I always think of trading like, what speaks to you? The market is always talking. Now, it's random, and at times we're going to throw our arms up and go, I don't know, because we don't know. But we can know, if we recognize it, definable behaviors, and then we can put the pieces together. And that's what the heat map is really about, is understanding intent, not what will happen, what might happen. The best you have in trading is maybe. Maybe it'll go up, maybe it'll go down, maybe I'll take a stop, maybe I won't, maybe it'll bounce here and take this out, or maybe this is still too high. They're in the book. And what happened over here? I got some buying. Let me try to get back to here. Created a bounce. There was some in here. And then that was it. Where was my sellers? There. In the book. Break, break. Now what? This suggests the counter rotation. How would I know that, you're going to ask me? Well, this is more profile oriented, but this, with this right here, showing me absorption. Why did the market go up? I got a buyer. Well, the sellers are stronger here. Why did the market go down? Well, right here, absorption, counter rotation. What happens when I come back here? This is a sweep, counter rotation. So let's see what happens over here. Let's just watch. How we doing, guys? This is the TraderLab. And really, the focus of the TraderLab is to help traders understand how to integrate a high-tier order flow tool like Bookmap into a process. You can learn, I believe, and it's just a personal belief, anyone who comes to TraderLab can learn how to trade. But this is not plug and play. I think we've all been there and done that. Plug and play. I always kind of joke a little bit about it, because when we come to trading, we're bringing our external experiences, you know, the outside world, and we're bringing it here. And we're going to take the things that have worked for us in the outside world, and we're going to apply them. But it doesn't work here. Trading is a unique environment. Remember where the sellers were. They were right there. Now, it doesn't mean it's a short. It just means, you know, keep your helmet on and let's watch the behavior. Sellers are there. Sellers are there. Now, this is not a strong high. So what you'll see these tops, retail traders pull their stops here. Now, it doesn't mean we're not going to go down. But in my little world of trading, and having been a retail trader and, of course, a professional money manager for years, I learned early on that stops are going to pile up. This is not a strong high. And again, it doesn't mean we won't go, you know, do the Acapulco cliff dive. But what it suggests to me is this is a vulnerable location. So we want to see what happens up here. Now, there's nothing going on in the heat map. There's some algo behavior here, a little pressure. And by the way, if you're interested in really dialing into this order flow, Bruce, who's our lead educator, I think it's, and Bruce, correct me what dates it is. I think it's Monday, Tuesday, Friday, maybe. Correct me if I'm wrong. Drills into order flow. And there's just a whole library of education on order flow, a course actually. And then every day you can see, I stream every day. You can see the interaction of these and how order flow, the heat map, and the tools can be applied in different conditions and integrating other pieces into it. So it's not it's not a one size. But if you can understand what this is doing, this is putting a little pressure on the book. It's algorithmic. So let's see what happens here. And don't forget what's sitting right here. Stops. I consider this a weak high. It's a double top. You guys remember double tops. And I remember early on when I learned a double top, oh, that's a short. Yeah, not so much for me. What it is for me is a target, because retail trader behavior is something, I have a little words I made up for myself. Think like a retail trader. Don't act like one. If you were short, let's think like a retail trader. Where would you have your stops? Would they be there, there, and there? Would I want to be selling this, or would I want to be standing aside because the potential of getting through here and maybe coming back here is what I might be thinking about? And we'll see what it does. I've got about 13 minutes left, or 15 minutes-ish. If you have questions, post them. I'll do my best. Yeah, Bruce is on Monday, Tuesday, and Friday in the All Markets room. And I strongly suggest you head over there. And if you can't, for any reason, they are always posted on YouTube for your review, as well as TraderLab and every other streamer here. It's all about education, and there's no cost for it. I believe you can learn to trade, but I'm going to say it doesn't mean you'll be profitable or have sustainability. Ultimately, the business learning to do this is educating yourself, and you're going to be in a very competitive environment. And it requires you not just to show up and think mechanically. It requires you to show up, think the way you have previously, but don't act the way you have previously, unless, of course, you're a consistent, profitable trader, right? Most of us, as we develop, are always going to have winning trades. And that keeps us potentially doing things that don't have an edge because of the randomness. We have to differentiate between randomness and edge. And the only way that happens, at least for me, and I built trading systems, I was years ago, and I was not a day trader back then. I was a swing trader and a trend follower. And I traded across many different asset classes. I had to build systems for it, which I did. So, and unfortunately, I learned something very interesting. I guess it's fortunate. I don't mean unfortunately. With systems, you do what's called walk forward testing optimization, curve fitting. And the idea was you take a chunk of data and you go backwards and then you walk it forward, and somehow that's going to predict the future. Theoretically, no, it doesn't, because today is unique, isn't it? It's not yesterday. It's right now. So we need to be here now, not trading something from 30 days ago or something that's curve fitted, because I kept always coming back to the same place in my system design. And that was I had to constantly re-optimize, and it was always breaking down because I was trading last month, the data set. And then how can you put the market in a box and think it's going to be the same? Is this going to be the same every day? No. The condition today, yesterday was shorts. Today it's two-sided trade. How can you bring yesterday's plan to today and expect a positive outcome over time? And yes, you'll have random winners, even if you have nothing but a blank buy and sell button, and it's random, a random buy-sell generator, you're going to have winning trades. That ought to give you an idea. You need to be thinking, in my opinion, about putting a confluence of pieces together that give you edge. And then whatever happens happens. Now, this to me potentially is going to get taken out. Will it? That's part of the randomness. I have no idea. What do I know? I know my icebergs are here, and I'm watching this liquidity get added over here. You didn't think I didn't notice, right? And if this is being added here, and I'm seeing this come up here, might it skew the book into the what? Stops? Into the what? Liquidity? Hope I have enough time. I only got 9 minutes, and it might, who knows how long it'll take. And it doesn't mean it has to do anything. Remember, there's no have to. It's the best you have is maybe. So maybe if I see liquidity here, and maybe if I see liquidity here, I can start to anticipate behavior. And maybe if I understand retail trader behavior, I know that they are trailing their stops here. And here's how we would know that. Where would you put your stop if you were short? Think about it. Would you put your stop over that swing? Maybe you'd put it over this one. You see? So right here, we're in balance. Now we're in what's called a two-sided trade. It is not a directional movement. We've gone into a balanced auction. It's different. So now my sellers are here and my buyers are here. Which side? Now, buyers are here. There's your absorption. That's the red delta. Sellers were absorbed. Those are stops and whatever else is coming out. Up here, I've got buy stops because my sellers were up here. So buy stops here. So I got sell stops under the buyers, and I got buy stops up here. Who do you think's going to get run over? Come on, you got to pick a side. Put it in the chat. Okay, we now have VPOC migration. This is a element in the TraderLab of the auction. There's more volume here. This is the highest volume for the day. We are in balance here. Now, what might happen here? This is too low. We had our sweep. Where's my liquidity? We want to watch the behavior here. They pull, they can open the door, and then we might come down here. If we find too low, which currently is out here, we can come, if we come across here, we can come here and up here. So that's what I know. This is like no man's or no trader's land because this is the fair price in the auction. So in a neutral day, the idea is to trade outside in, and this is the mean. Remember, it was the target coming down from the short up here, which was just an example, not a recommendation. And if this moves up, if I can clear, and now if I can't clear this, I can come down. If I clear it, then the potential is to squeeze. We're in the middle. So this is balance. So it's either there or there, but no trade in here. It is a target for me, not a recommendation, because the best you have, remember, is maybe. So let's see. If we think like a retail trader, we would be thinking potentially, and that's always what you got, that we're going to take this out. Right? Let's watch. So my question to this astute group of traders that are visiting today, what would you do about this? Would you anticipate this? And if so, what would your next step be? Where might you be looking to observe behavior for potential trade? Where might that be? Where might it be? Okay, let's watch. Notice this is going dark. We have to watch. By the way, when you're in this kind of, in the retail price, the highest volume, it's very choppy because it's a fair price. Most of your volume is here. So what that's saying is everybody's doing business here. That's why there's high volume. When you get outside, and if it gets too expensive, you'll find your sellers. If it comes outside, you might find your buyers, and the market rotates. That's what's mean reversion. And underline the term mean. What is this? Too low, potentially. Mid VWAP. Now, there's no trade here, at least for me. Doesn't mean you can't trade if it's part of your edge. For me, now, this is important. If we get under here and keep going, then the idea of the squeeze for the moment would be off the table. And it doesn't mean it won't come back and squeeze. So what we know is down here, we have the liquidity, and this yellow line was the retail price is potentially too low. I don't know. This is the current retail price. If I stay above it, and then it can do anything, VWAP and mid. We're in a fair area, and it's chop in fair areas. So if we're going to be a buyer, if that was your plan, you want to buy it when it's on sale so it can come back to the retail price. If the price gets too high, which is what this was, you want to sell it to come back to the retail price. That's its specific plan, and you can learn this in TraderLab. And we're looking for what's called mean reversion. So it's outside in, outside in. Right now we have the outside in there. And that trade could be done. Now it's which way? Well, if I have shorts in the market, the path of least resistance potentially is going to be the squeeze. It doesn't have to. So let's just watch. What do we got here? VWAP in mid. This now is resistance. If I come above here, remember, we're looking for this, and then this. So let's just watch. You guys have questions. I got about 3 minutes. Wait for stops. Shark balloons with the sellers. It's almost like a horse race. Here they come, spinning out of the turn. Who's going to get squeezed? Always a great question. And nobody knows. I have to remind you guys of a couple things since I'm running out of time. By the way, if you're interested in the TraderLab, it is available for everyone. There is no cost. It's in the Bookmap server. Just scroll up or down and you'll see it in the chat. It is open for everyone. It is about the business of trading. As I like to say, it's not romper room, you know. It's open to everyone. Doesn't matter how long you've been trading. We've all gone down the same paths. We've all really had the similar experiences. We've all walked in the same shoes, you know. The thing is, if you keep waking up in the same place, working hard and not getting a good outcome, you might want to consider examining why. Because it may not be your effort. It may be your process. And TraderLab is available to everyone. Now, I want to remind you, there is a special sale going on right now. And if you were thinking about Bookmap, this would be a great time to get your hands on it and work with it. It's a 4th of July sale. It only goes to July 11th. So go to bookmap.com if you are interested. And in checking out Bookmap, there's different configurations. Use the link, bookmap.com. Go over there, check it out. It had a substantial impact on my outcome, gave me a better understanding of market mechanics. And when I have confluence, it adds to my edge. Thanks again, guys, for visiting today. Thanks for taking advantage of this series on how to use the heat map. If you have further questions on how to put a process together or build out a trade plan, visit the TraderLab. There is no cost. Take care, everybody, and thanks again for visiting the TraderLab and the special series on how to use Bookmap's Liquidity heat map. Take care.